Welcome back to Dominating Your Investments with Dom Rinaldi. I have another special guest here. I have Jake Uri, who has his own YouTube channel that's come out on investments. And I know all my Palantir viewers have seen Jake's posts on FinTwit, as well as Tesla viewers. And I want to talk with Jake today, just a casual ad hoc session on stocks. Of course, we're going to talk about Palantir, but we're also going to talk about Tesla. And I'm going to get an education on Tesla because it's a stock that I've not held other than a share. And I know, shame me now, FinTwit, but I do want to own Tesla. I do want it to be one of my top 10 positions. I know I'm super late to the game, but I want to learn about that stock and also just talk about other stocks and what's going on with the market. It's very frothy right now. Growth stocks, the larger ones are carrying the momentum right now. And we'll talk about that. So Jake, why don't you introduce yourself and introduce yourself to our fans here?
Yeah, thanks for having me, Dom. Yeah, my name is Jake Uri. I've got a pretty active Twitter account that pretty much exclusively covers Palantir. I'll comment on some other things occasionally, but I like to put out a lot of the fundamental metrics going on with Palantir, especially surrounding the quarterly results. And then I give my opinions on those types of things on YouTube. Probably don't post quite as much as people would like. Usually people leave a comment saying it's time to post another video. So that's when I know it's time. But yeah, happy to be here.
Awesome. So I guess we'll start with Palantir because that's what we love talking about here at Dominating Your Investments. It is one of our favorite stocks here. I believe we both can agree that we feel it's a $1 trillion market cap company in the future. Yep. And I just got done talking an episode earlier this evening with Felix about it. And this is not investment advice. We all know and read the disclaimers, but we are long-term investors. This is not something that you're going to get instant gratification on. I think the Wall Street Bets group and everyone who's a trader may misinterpret Palantir as that, but it's a long-term play. So maybe we'll just talk about what's happened recently with the Birds SPAC investment. I'd love to hear your take and what your thoughts were on that.
Yeah, they update on their quarterly filings, their SPAC investments, and some of them most of them they name by name, and then others, if they haven't announced it publicly, they'll say something like mobility company, which in this case, most people now believe to be Bird Global, the e-mobility scooter company. And yeah, it's interesting kind of seeing how many of these they're coming out with. And I think in this last 10Q, they listed 2 additional. They didn't name them. I think I have them up now.
Yeah, we were going through this earlier with Felix, and there's some that are just listed as categories, but not actually told the name. So we have one that says autonomous vehicle company for 18 million. And then we have a company, I never heard of this acronym, AEVC, for 30 million, which is actually one of their larger SPACs. And then there's a EV charging company. And then of course the mobility company, which I think we all now have seen on the paperwork, was Birds. So what are your thoughts on just what could they do with Foundry, with a mobile company that has the scooters and customers just getting around in cities?
Yeah, it'd be interesting. It kind of reminds me of their deal with Data Robot with like customer demand projections, and I think this kind of speaks to the value that Palantir offers through Foundry, where you can integrate different models depending on the needs of the customer on top of Foundry through either these partnerships or something that Palantir has in-house or something that the customer builds. And you can kind of ask the questions that your employees are already asking, the problems that they have, integrate that into Foundry and answer those questions. So where is the best place to actually deploy these scooters? if we have this product, and we're worried about, all right, how long does it take to recharge them, or where are these actually going to move throughout the city? Now, and I'm not an expert on Bird Global, but I'm kind of imagining some of the problems that they might have. And something that actually really struck me about one of their latest announcements with Rio Tinto was some of the solutions that they were solving for were like, when does the train arrive within this boring tunnel to remove the waste out of the tunnel? I mean, they're using an AI model to do these things that, when you hear of it, it's just like, wow, the use cases are enormous. And so I'm not surprised to see all of these different types of companies partnering with Palantir through these SPAC agreements. It's really interesting to see the variety that they're going after.
So I'm on their website, and just on this specific topic of the multiple use cases, and with birds, for example, one of the things I got excited about was, here's another use case for Apollo. We got edge compute, and we got IoT devices. And if we just look at their offerings, when you go into their 40 different industries they support, you go into IoT, they talk about how they're able to provide equipment health data, ERP data, transactional data, research data. And me and Felix were talking about this earlier, was, what do we know about data? Okay. We know it grows exponentially. We know that in the last 3 years, I believe the statistic is, we've had 92% of the data in the last, like, all time, right? And it keeps compounding, right? We're going to keep seeing this just the nature we live in. Mm-hmm. And so data is the new currency. You need to understand how to use it in order to actually make it worth something for you. And what you hit on earlier is, in order to sell at the enterprise level with a lot of these software solutions, you need to be able to quantify the result. And just in your example there, they're able to quantify what you're saving in something as simple as taking waste out of a tunnel and actually saving them money.
Yeah, and it's really like what I hit on a lot with Palantir, and because you always hear these questions, what do they do? What do they do? And when you listen to any of the founders talk, whether it's Stephen Cohen, Peter Thiel, Shyam Sankar, they're talking about the difference and almost the limitations of artificial intelligence today and humans, where AI can do quantitative things very, very well, but it's stuck in this kind of local maximum loop of what you've already asked it to do, and it's up to the human user to look at the qualitative questions and the qualitative data. Humans can look at this data represented and draw conclusions that a computer just won't. And that really gets at the core of what their intentionality is. When they integrate data throughout an organization, they're labeling it not only for who has access to this data, the security level of this data, where can it go when it's aggregated, does that change where it can go, but it's also how reliable is it, how complete is it, what's this being used for, and it's through those questions, when that data is actually integrated onto Foundry, when the subject matter expert or data analyst begins asking these questions, they can look at it from a human aspect, and they don't have to worry as much about sifting through an Excel document, and it's really refreshing to hear that kind of separation between the qualitative and quantitative, and allowing people to do what they're good at.
And that's how they were founded, right? When we look at the PayPal example, it was not a matter of AI replacing humans. They understood that there needed to be a human component mixed with AI to make the right decisions and detect fraud. And then, of course, Peter Thiel said, why couldn't we do this for the government? And here we are 17, 18 years later now with Palantir. And, you just look at some of the use cases and you look at on their website. I always find it funny how people say it's a black box and they don't understand what it does. I get that it's complex, right? But they put so much information on their website. You could literally do essays on all the different use cases and what they're trying to deliver in results. You look at Edge AI here, and it says Palantir makes models operational by deploying them on top of a data foundation, empowering cyclical feedback and decision at the edge. And they have pictures of satellites. And we obviously know with Gotham, they were able to help for our troops and transportation with cargo. But think about all the different things that can happen with satellites and autonomous driving and all the different things in the future. It kind of seems limitless.
Yeah, and kind of goes to what you were talking about with the kind of expanding and growing, compounding TAM around this, because there are more edge devices being deployed every day. There's more use cases, not only like satellites, looking down, assessing, forest fire conditions or submarine movements. It's Internet of Things in the home, in the factory. And as these devices become more integrated into the owning organization, they have to manage that. And that takes a tremendous amount of orchestration. And the example that I always point to when talking about Edge AI is Google Home, because that brings it home for most people. They have this AI algorithm, voice recognition algorithm, sitting in their house. That's an Edge AI example right there. But what Palantir can do is manage that, roll out different models to that edge device dynamically, analyze the information and the data coming from that device and incorporating it back into the central operating system that integrates all of these different sources from throughout the company. And I get really excited about the potential for this, because I think you were talking to Tom Nash a couple of weeks ago now about the $1 trillion question.
Oh yeah, we got into a little debate.
yeah. Is it necessary for them to have a B2C product to reach that $1 trillion market cap? And I agree with you. I think that given the TAM and the growth of the TAM and the advantages that Palantir has, especially with Apollo, I don't see a reason why the B2B would be a limit for them at all.
I will give Tom credit. So Tom, if you're listening or watching, he did make a pretty strong case in that there isn't a company out there on the top 100 list that doesn't have a B2C product that is a $1 trillion market cap company. Yeah.
And that's that. It almost is what makes me almost lean into this idea, because when I look at the companies that make the most difference are those that get into an industry that is underserved dramatically. And those are usually the companies where people point at and they say, it's almost a dead horse, beating a dead horse to call out Amazon and the naysayers of Amazon and say like, well, look at their valuation compared to Barnes and Noble in the early years. And people were saying, this is completely unjustified. But it was a completely different way of doing business. The same can be said of SpaceX and the kind of large prime government contractors, but it was their ability to control costs and roll out Starlink in SpaceX that arguably adds 100-200 billion dollars to the SpaceX market cap, even in the private sector. And then Tesla, the automobile industry. It's these underserved industries where innovation has kind of stagnated. And when you think about Palantir, their original mission was to go after these government problems with software, and then after that apply those to the enterprise, which back in the early 2000s, nobody was talking about enterprise software out of Silicon Valley. It was all B2C. So we have yet to see a $1 trillion market cap company that serves B2B, because the attention just hasn't been shifted that way yet, in my opinion.
No, and I think that the case that says, hey, this could happen is, I don't recall a software company that has so many different applications and use cases that are custom fit for different industries that continue to build upon itself. Like, I'm still on only their IoT page, and I see here manufacturing, predictive maintenance on robotics and manufacturing plants. Okay, one use case. Oil and gas, asset simulation and optimization and root cause analysis, right? How do we prevent these oil spills and other things going on? Automotive, fleet management and analytics and predictive maintenance. One of the things that we just got into with Felix, we talked about, was Airbus just announced that they're going to be coming out with their own eVTOLs, right? The electric, I don't know what you call them, airplanes or whatever you want to say, EV transportation in the air. And we already know they have Lilium as a SPAC, right? And actually the guy, Felix educated me and said the guy who came from Airbus to Lilium to found Lilium, or one of the leaders there, was from Airbus. And so now who wins in that situation? Well, it's Palantir. Airbus is already a customer with Skywise, which has revolutionized how they maintain fleets in general with airplanes and all of the airliners using that. Now all of a sudden you look at, what about EVs with Wejo? And now you look at the birds on the edge with those kind of devices, and there's going to be more kinds of, what about drones, right? Think about how prevalent drone delivery will be. Then we look here, something boring, food and beverage, right? Food and beverage.
Box.com.
It says batch consistency and deviation improvement and process efficiency. And then we get into fun things like chemicals and biotech, yield improvement, batch quality analytics. Then they talk about metals and mining. This is where Rio Tinto, preventative maintenance and asset utilization. And then utilities and energy. And we saw the commercial, well, two commercials actually, one on how they help redistribute energy at the edge for solar and wind, very similar to what STEM does. It's very, makes me cautious on my STEM investment, but you know, there's winners for all in that big market. But then the commercial, did you see the commercial they launched where it was like a movie and it was like 4 minutes long? I thought it was the best marketing I've seen in a long time. It was,
that was incredible.
I mean, I was hooked. And my wife was like, what are you watching? And I was like, I'm watching a commercial on Palantir. And it was like literally a movie scene of two alternate realities of, okay, you have the data and the technology to either make the right decision to shut down a power grid or you don't. What are the two business outcomes? And then you look at the trickle down effect on how data is so critical in our life, where the first initial outtake was they shut down the power grid because of the storm. And because of that, when the hospital has their surgeries, they normally have a power breaker to reboot the power on, and the breaker dies. And then all of a sudden, now we look at all these people who are dying because of surgeries gone wrong, right?
Yeah.
Versus the alternate.
Yeah, and I mean that hospital example, I mean that kind of brought it together for good, good advertising, but we don't even have to really stretch the imagination. I mean, back last winter in Texas, all the issues that they were having with their power grid, and the impressive part of that was the decision-making capability was in the hands of the technicians sitting at the desk. It wasn't with an analyst, a data analyst, who works, Monday through Friday, and is buried in something that has nothing to actually to do with the people on the ground. No, this was a subject matter expert who had those tools, and that's what I like the push from Palantir management, Sankar and Karp, when they talk about empowering the fringes of your organization. And I love that advertising, because it really, it highlighted
Well,
exactly.
it makes it real, right? And it
Yeah,
makes it quantifiable. Like you
yeah.
think about all in one situation of the movie, they're getting sued and they're having to defend their company in a more legal aspect of it, right? Millions of dollars going in on that, versus the other is we were able to prevent this from happening. We were able to make the right decisions because we had the data at our fingertips through Palantir. This is, why we use them. And obviously it was a little, dramatized, but the point gets driven home. You look at the impact that so many different industries have in our life, where it eventually comes to the consumer. I would almost say, yes, you're a B2B, but the alpha you're bringing in the customer experience because you're using Palantir, it is B2B2C, because you're
Yeah.
impacting the consumer experience. Because, for instance, supply chain, I'm not, worried about toilet paper going out. We know the supply chain issues or whatever it may be, that the grocery stores can deal with. Or we look at the cargo issues, that we're dealing with now on the Western coast. All of these different things, trickle down to eventually the consumer. Even energy, right? Like the incident you talked about with Texas, that would be something they would play a role in.
Yeah. I mean, they could have, theoretically, given the scenario that they gave an example with that commercial, they could have run those kind of temperature models in Texas last year to say, okay, what if we did have a 1 in a 100-year storm? Which parts would fail? And then they could assess, all right, what's the risk in not replacing those or upgrading those? I think a lot of the issue was that the LP or the gas lines, they just you don't upgrade those for a 1 in a 100-year storm. But to be able to do that risk benefit analysis is invaluable for any company.
So, I mean, I just find it so interesting and fun to look at the different use case. And I haven't went through all 40 of these pages because they literally have in-depth information on every single use case they have with videos and business reasons. But you look here at Palantir's retail offering, right? They're categorizing them as industry offerings. So you think about all the retail stores that are out there in our world globally. And of course, Palantir has said, hey, we're only going to be dealing with the US and Western allies. So already that does shrink the TAM from that perspective. But we know that the use cases are multiple 40 plus industries. So there's enough TAM to go around for everybody. But you look at it, and so they say software defined data integration, which is what we saw in the recent LinkedIn video that they hosted last week, and was kind of first attempt for them to use LinkedIn video. There had some issues.
Yeah.
I would recommend them having some salespeople, not to knock their forward deployed engineers, but I think we could have done a better job
Yeah.
of communicating what they're actually delivering in that alpha, right? And with enthusiasm, with passion, right? Today, it says, today shocks to supply and demand have become the norm. Consumer preferences now fluctuate at breakneck speed. To win in this new context, retail organizations need near instant visibility into demand and the ability to adapt their promotions, inventory, and operations in real time. Palantir Foundry enables these capabilities by bringing legacy data systems, ERPs, and machine learning into shared end-to-end environment with a retail organization's data scientists and business users. So if we construct that and take that away here, they're not replacing those legacy data systems, right? They're not telling you, hey, you got to go spend millions of dollars with us and to go tell your boss, hey, sorry, we bought the wrong ERP last year. No,
Right.
they're telling them, you take your investment, enhance it, and get the results you actually were desiring out of what you were buying.
Yeah, and that's the cost of or the customer acquisition cost is something that's thrown around a lot in SaaS. And when I hear that you don't have to convince a customer to shed the nervous system of their organization, and you can sell them maybe one or two modules that fill a need that they have currently, that's a huge foot in the door. And that was one of the questions that I think, man, I forget which analyst it was in Q3 on the earnings call. He was really asking about those modules, and yeah, I think that's such an important aspect of Palantir Foundry, because you don't have to rip out the nervous system. You just add, all right, some demand forecasting models. Okay, we're gonna have this section within the company utilize Foundry. We're gonna have 10 users, and this is their job.
If anything, it connects it, right? It connects the tissue between the nervous system of their business.
Yeah, it's going to take sales, it's going to take marketing efforts, and it's going to be visible to these groups of people, and then we can actually make a plan based on the issue that we're having. And it's because of this that I think that you see the largest 20 customers in their quarterly presentations, where they show that increase of it's $2 to $3 million on average per the top 20 customers. And it goes back for the last 2+ years, just every quarter, it's going up and up and up. And I think that's what a lot of people miss is that negative revenue churn is going to just take off for them as they add customers.
So one of the things that we can take from that, I know that, and we were talking about this before we aired, why doesn't Palantir share their NRR, their net revenue retention rates? My guess would be there's still some concentration there. They don't want to have to deal with something else that they get dinged on for that. But what we can just take from their top 20 customers and the expansive growth in revenue is customers are buying more because the alpha is being delivered and it's justifiable. And that's only going to make those switching costs even harder, because if I'm a retail store and I started with, accounts payable and maybe inventory, and that's where I started, okay, great. But now all of a sudden you got my sales group using and my marketing team using this. Now all of a sudden you're connecting this. It's become what they said, the core modern operating system of my business. And they say here on their use cases, they outline different use cases in just retail. The next one says promotional optimization. We propose SKUs for promotion to purchasers. Leverage intelligent demand forecasts to automatically suggest ideal quantities and allocations. That's saving costs and OPEX and CAPEX. Manage ongoing promotions and pricing to reduce stockouts and waste. I mean, there's so many use cases in this one offering. You are making alpha for multiple parts of a business, and you're connecting it together. And oh, by the way, you're doing it with low or no code. That's important, because you can't train an accounts payable department and say, hey, this week we're going to be teaching you guys Python and you're going to become developers, right? Not going to happen.
Yeah, and that's true for every profession. Lawyers don't know how to code. Like I myself, I'm a fire safety inspector. I don't know. I have plenty of problems as far as discrepancies in the fire code in various facilities that I look at. I can't create something that assesses the trends over time, without a low code. It would be very basic. It'd be something, I built in Excel, or it could be more dynamic. It could pull information from the enterprise software that we already use to upload those deficiencies. So, I mean, this is a problem that needs to be solved by those subject matter experts. It can't stay in the analyst corner of every enterprise.
No, you're spot on. And we know that not all the companies are customers are announced. They like to say anonymous, right? They want their competitive edge probably, or they don't want the headache from a political standpoint. I'm looking here at, I switched on their website to say, okay, let's look at some of their impact studies and customer retention. And it says here, acquiring and retaining OTT customers, a leading national broadcast network. Okay, so we don't know who the network is, launched its own OTT platform to stay competitive with new digital entrants, but venturing into new territories presented new challenges. From acquisition to retention, the digital customer journey generates a massive amount of data, click streams, payments, subscriptions, viewership, and more. But the systems that capture this data were siloed and data quality was inconsistent. Without a holistic view of its customers, the network struggled to answer questions related to marketing ROI and customer lifetime value. So here it is, maybe it's Disney Plus, maybe it's, Hulu. Well, Hulu's owned by Disney too now. But you get the idea, maybe Roku, who knows? But the idea that, and even actually gave the numbers here. So it says the impact. Decisions on how to allocate marketing budgets are now fully data-driven, optimized for revenue and ROI, which resulted in a 300% increase in engagement of target groups in one campaign. So we got more customer engagement by 300%. 5x more campaigns were launched by network. Because of this, decisions on how to allocate marketing budgets are now fully data-driven and optimized for revenue. So, another use case in another industry that ultimately trickles down to the consumer. So Tom, if you're listening, and we can talk about this next time, we're already doing B2B to C, baby. It's just not selling straight to the consumer yet. I do think that you're right. We get there, and I want them to create something that helps me get through my email, because I can't stand archiving and responding and what's important, what's not. There has to be a better way for email management. So let's transition, because I could talk, and I know you could too, about Palantir all night long. Talk to me about Tesla. There's so many companies out there to invest in, and you can only choose so many unless you just want to basically manage your portfolio like an ETF. And I never got into Tesla. I got in before pre-split and bought 1 share, so I have 4 shares. And I do want it to be a top 10 position. I'll tell you why. Because I think that they are so much more than a car company. I believe that energy consumption and savings and optimization on what's going on with climate change and what's going on with our world around that, it's not going away. It's only going to be more invested in by multiple countries, by consumers, businesses, everything. If I could lower my power, my energy bill, my electric bill, significantly, I'd be all for it, because I feel like, well, how does it get this high every month? So just give me your perspective on why you've been a Tesla shareholder. You obviously have been there for a while on it, but talk to me other besides the EV piece, because that's what everyone's hyped up about.
Well, I think, well, Tesla is what got me into investing, because I whenever I talk to somebody that's interested in buying individual stocks, I talk about how following the fundamentals and the kind of mimetic desire. I don't know if you're familiar with that phrase, but when you have a product that just speaks to people in a way that, the net promoter score is just off the charts, whether it's an Apple iPhone or a Tesla, which have very, very high net promoter scores. It's like this avalanche coming behind you. And so when I talk to people, I really stress, look at the product, get to know the product, and really think, if I incorporated this into my life, how would my life change? And what I like about Tesla, and when we were talking earlier, before we aired, I mentioned Gary Black. What I really like about him is when he values Tesla, he only looks at the car aspect. He only values it on the growth rate of the automotive sales and the margins that they're achieving there. And with his price score of $1,400, it's a very solid business to get into. And we were talking earlier, when people compare Tesla to other auto manufacturers, they say this is ridiculous. It's got a market cap of Ford, Toyota, GM, all of these companies combined. And what that highlights is the importance of margin. It's not about how much money comes in at the top line. It's about the money that you keep at the bottom line. And ultimately, when all is said and done, it's a multiple off of that. That's what your shareholders are going to be paid from. That's why Google is worth more than every airline industry. And Peter Thiel talks about this in his book 0 to 1. Google's worth more than every airline combined. Is Google more important than the airlines? No, obviously not. The airlines form a much more important function, but where Google has the advantage is they haven't commoditized their product, or their product hasn't been commoditized, and they keep most of their revenue or a sufficient amount to have a much higher multiple. When they roll out a new product and expand their TAM, investors know that the revenue that they get from that is more of that's gonna hit their bottom line than, say, something like American Airlines or Delta. And that's really what sets these companies apart, and that's why Tesla has its valuation. And if you look at their growth rate in automotive, they're growing at more than 50% per year. And even now, people will hear that assertion and they'll think that's not possible, or the demand won't be there. But I've been hearing that since 2013, and they've done it relentlessly since 2013.
Past 5 years, annual historical growth, 56%.
Yeah, that's impressive. It's so impressive for a company that's manufacturing something so complex. And that's just, as I said, the automotive side. And a lot of people point to the energy side, the energy storage, the solar panels, as this, it's kind of their last, the shorts, their last hope for kind of a hole in the business model. But if you take the success that the company has had so far, and take Elon Musk's his assertion at his word, that's due in large part because they had an extremely hard time with the Model 3 ramp. They almost went bankrupt trying to ramp that product and reach mass production. And then the issues in late 2019, early 2020, really with the pandemic and supply chain issues, it's put energy on a back burner. So the home battery storage in particular, and solar panels. But when you look at at the large scale battery storage, I share the opinion that I believe is shared by ARK Invest, where they say that energy storage is this kind of brilliant way for them to deploy excess battery production if their vehicle production is lagging behind, or their vehicle demand is lagging behind. So if they order from 6-7 different battery manufacturers a certain capacity by a certain year, and they get that capacity, but they don't have the factories online to put them into vehicles, or maybe they have to pull some more demand levers and lower cost on their Model 3s, Model Ys, or their next generation vehicle in the next 3, 4, 5 years, they can deploy that at the Megapack, in the Megapack product at the, to replace those peaker plants throughout the world, or through home battery pack solutions. And so that's kind of a great way to not have that kind of inventory on hand, to not have to walk back these deals with suppliers. But as far as the really big bull case on the energy side, I think most of that will probably be with peak energy demand, meeting that demand curve dynamically, and any kind of software that they deploy to correct those kinds of crazy spikes or demands in like an energy grid. That kind of almost software as a service for a local government to do something like that. I think that's an interesting industry, but as far as I'm concerned, their automotive revenue, that's gonna more than justify their current valuation.
Yeah. And thank you for the deep dive.
Sorry, that was pretty long-winded.
No. I'm long-winded. This is an area I need to do more homework on, and you definitely have helped me jumpstart this. I'm looking here on Simply Wall Street, and several things jump out of me. One of them is, and I guess you see this through the media, but there is a hefty amount of non-believers still in institutional money. When you look at the shares broken out, 36% are on retail, 45% on institutional. So I would have thought, institutional would have been higher than 45%. I know Palantir is climbing up to 32%, and there's tons of haters there, but that was the first piece. The other piece that was shocking was ARK Invest must have sold a lot out of Tesla. In fact, negative 27% sold out in the last quarter of shares. I don't take, she manages an ETF. I don't take Kathy too seriously as far as, oh my God, she just sold a whole bunch of Palantir. Now she doesn't believe in Palantir. She has a predicament of being in an ETF that most people don't understand, that you have to rebalance funds. There's rules. There's you have to keep shareholders equally balanced in a lot of different ways. But you look at, okay, who's invested? The number one shareholder is Elon himself. Okay. So he's very invested. I always look for founder-led leadership. I consider him the founder, right? Like, let's be real. Okay. I know he's not technically the founder. He's the founder. You think Tesla, you think Elon Musk, period. He still owns almost 17% ownership, even after selling all those shares this past week. You got Vanguard, you got BlackRock, two exceptional firms. You have Citadel, State Street, Bally & Gifford's a great tech investment firm. All these different ones here. And then you look, something else I like to look at when I look at companies is the ability to grow your employee count and still drive free cash flow and margins and revenue, and to grow rapidly. And I look at this, and we are 2021, right? 6 years ago, 10,000 employees. 6 years ago, 10,000. Guess how many they have now?
Oh gosh, worldwide, I think it's pushing 100,000, isn't it?
It's not that high, but it's getting there. 71,000.
Yeah, that's huge.
Okay.
Yeah.
That's a 7x in 6 years, right? Coming from working at several different Fortune 50 companies in my time in tech sales, growing your employee count that big in that short amount of time and growing your revenues, growing your stock price, and becoming profitable and generating free cash flows, all the while dealing with, during that time when you said the Model 3, right? We all remember, and that I remember where I was sitting when I heard the news, the CNBC analysts say new price target for Tesla could be as low as $17. They could go out of business. And I was like, this is the time to strike. And I said, if that's that close to going out of business, do I really, even if I would have just put $1,000, man, shame on me. And you heard it here, FinTwit and my listeners, shame on me for not doing that. But you look at all that, and that it just breeds excellence to go from that spectrum of being almost bankrupt to now. When I look at their cash flows and I look at their balance sheet, it says here their debt to equity ratio went from 102% to now 23% in the last 5 years. That is free cash flow and margin growth out the yin yang.
Yeah, they've kept OPEX has been flat for so many quarters.
Their interest payments on their debt is covered by 9.3x coverage. They have 29 billion in physical assets, 5 billion in long-term assets, cash 16 billion, with debt of only 6 billion. So, I mean, once again, one of the things, and they have all 6 check marks now on their financial health. Not only cash is king, you have to have cash to innovate, right? But they focus so much on the automobile side. What's to say he doesn't start a whole nother part of Tesla and focus on that when this is more on autopilot, right? We have new cars coming out, new SUVs. This is my problem with long-term or not long-term investors and media and traders is they lack imagination. Like what's stopping Elon and his team of leadership from having something in AI that, for instance, they partner with STEM right now for redistribution of energy in their batteries. STEM has their software called Athena AI. But if STEM grows and ends up being more of a competitor than a partner, why doesn't Elon just buy them and then build out even better, right? Another arm to his energy empire, or create something with AI. Regardless, I just think don't underestimate some of the most visionary leaders of our time. I think people have done that with him. I think they've done it with Jensen Huang. And you look at, they've done it with Alex Karp and Peter.
Every single one. Mark Zuckerberg, people laughed at Facebook, and there were people, saying like, just wait. When they turn on that revenue switch, you'll see. And and they did. And then
Bezos, right? You're not profitable. You're not profitable.
Yep.
I'll turn it on when I'm ready, right?
Yep.
These are visionary. I will give Jim Cramer this. I like what he says. These are the Da Vinci's of our time, right?
Yeah.
Ultimately, when we invest in companies, yes, we do invest in businesses and products, but we also, you have to take the people aspect into it just as highly. And that's why 90% of my portfolio is in founder-led companies. Mm-hmm. And I think what you saw the last 100+ years, 200 years in investment in stocks, there's going to be the market's changed in some areas, right? We'll see pullbacks, we'll see all of that, and crashes and everything else statistically happening, but we know it goes up and to the right historically. I don't think that's changing. But the idea that you can't have a $10 trillion market cap company is no longer. I think technology is what's fueling this and is deflationary, as Kathy Wood says. I would agree with that, but also that the imagination is not big enough sometimes when you think about where we'll be in 10, 15 years and who's going to be driving that.
Yeah, if you look back 10 years ago, the largest company was only a couple hundred billion. I think it was GE. And when I see conversations on FinTwit, I try not to get involved because I don't want
I
to,
hear you. I hear you. It's not worth it. It's not worth it.
But you see people kind of shut down when you hear these assertions of a $10 trillion company or $13 trillion company. But if you look back at where we came from the prior 10 years, it almost seems like the natural progression. I mean, whether, that's going to be partly inflation, that's going to be partly the value that these companies create, but that should not be a kind of conversation stopper for people. It shouldn't be. You should, I mean, how many companies do you actually hear of that are actually in the running? Who else is talking about the next, or a potential $10 trillion company? I mean, there's very few that I'd be willing to put in that potential category.
And that begs the question, opportunity costs, and this is what I struggle with. How much is enough for you to be financially satisfied to where you could retire, be financially free, and know your risk is limited, versus going small cap and mid cap moonshot hunting for 100 baggers and everything else. And by the way, if you haven't read Chris Mayer's book, 100 Baggers, it's one of the best books out there on money and finding generational wealth companies. But do you even need that, right? Like I am fully confident that NVIDIA, and I said it when they were 300 billion company, I said they were going to be a $2 trillion stock minimum going forward, not putting a time on it, but they'll get there. And now they're almost 800 billion. I think that's a safe bet that I will, triple or quadruple my money from here. Why not just keep it's my number one position, but I know, be diversified, don't risk. But if you have like 5 to 10 just monsters of companies that you believe in the founder, you believe in the business, and they keep mutating themselves into a new business, why wouldn't you just add to that opposed to, trying to find the next NVIDIA?
Yeah. And if you know what would change your thesis, why leave it before that's changed? Because if you know you're going to get a decent return, but you're not as familiar with what you're going to go buy instead, like if something were to happen at NVIDIA that to you is like, wow, that's not why I bought this stock, that's a huge red flag. Yeah. That's a way easier reason to get out than if you went and bought, something that you weren't familiar with, you hadn't been following them for as long. It's a lot harder to identify those red flags.
No, and that's why I'm trying to get my portfolio down. People who've listened to the podcast, I started at like 77. I had this whole, diverse, hey, your winners are going to run. They're going to outpace your portfolio, which I truly still believe. Mad shout outs to David Gartner for that, and Rule Breakers for Motley Fool. Winners will continue running, and my top 20 positions that out of my now 50 are 92% of my returns. And if I really were to take that down to my top 10, that's like 70% of my returns. So your winners will continue to run. They will continue to be, you will eventually consolidate. I mean, your portfolio will become more consolidated. So, and then people say, well, I was kicking myself for not buying the trade desk when I thought it was overpriced at 180 bucks. Or for me, in this instance, I remember the day before the split of Tesla, and I'm like, 440 bucks, or whatever it was. And I was like, it's a car company. It's not. And I knew at that point too, it was more than a car company, but it was tough for me to get excited about it. And I think that actually bleeds into another point of, you do have to invest in what you're going to follow and what you enjoy, or else you're going to just get bored with it. And then the first time you get punched with a 50% decline, you're gonna do something else with that money, you know?
Yeah, yeah, definitely. And yeah, getting bored about following your investments is something that I caution a lot of people against, because when most people talk about investing and they think, like, oh, well, I'll buy this company or that company. And I say, well, are you going to listen to their earnings calls? Are you going to, I mean, is this conviction because I've told you about Palantir or Tesla, or is it because you actually want to learn more? And so I usually caution people away if they're just going to like, oh,
They
I want
want
to
a
buy
free lotto
Palantir.
ticket. They want a lotto
Yeah.
ticket.
Yeah.
This is my favorite quote, and I'm sure someone created it. I just repeated it probably. Conviction is earned. It's not bought. It's not borrowed. Um, period.
Yeah.
And it's so much more fun and enjoyable, and you can endure those drops when you've done the homework, you've listened to the calls, you feel like you know the CEO. Hell, you'd buy I'm gonna buy some Palantir gear. I'm gonna, like, they have a little
Yeah.
swag shop, you know. I've even thought about making my own little football jersey of Palantir because I just like the company that much. If you would even go work for them, you know. So
Yeah.
I just think that you you want to have that level of conviction if you're going to be a long-term investor, because there are going to be times where it's going to hurt and they're going to drop heavy. um, Digital Turbine, a stock that I had that was all the way up, went from $5 to 110, back down to 47. Didn't feel fun. Didn't feel fun at all. But
Yep.
nothing in the thesis was changed. It went all the way back up to 90. Now it's back down to 60. The market is irrational, but as Buffett said, initially it's a voting machine, but eventually it becomes the weighing machine, as you were talking earlier.
Yeah. Yeah. It's hard to see. I mean, even Palantir kind of fall back to the lower 20 level. I mean, when it was up in, 29, I thought, all right, we'll have some retracement, but we'll never see those
Yeah.
low 20s again.
Yeah, honestly, we were all talking about, I was like, nah, we're
Yeah.
never going back below 25. We finally got a new support level.
And then
And
I get a notification from my broker about my call options, like, hey, you're going to lose money this Friday. Like, yeah, I know. Yeah, it's terrible. But I mean, like you said, my thesis hasn't changed on it. I mean, just because communication was bad in one quarter or something, it's not why I bought it.
no. And that's where I sometimes slip up and like getting greedy, where I was asking Felix earlier, like, hey, you think we're going to 20? Because if we go to 20, that shelf's not holding and it could go in the teens, and I'm just gonna load the boat. And I've already loaded them. I mean, I took it from a zero position a couple months ago to my fourth biggest all position. I want it to be my number one position by the end of December. But does it really matter if you got it at 20 or 21? I'm holding this for decades, so I just need to stop being so greedy about that. But if we do see a major, and that's why I'm trying to hold back, right? I'm trying to hold back till January, February, because what we've seen in the market this year at 30% gains of the S&P 500, there's just too many moving parts in what's going on in our world, in politics and economics. Eventually, we're going to see another one of those painful pulls. And I want to be able to say, I waited. Not that I try to time the market, because I keep investing each paycheck each week, but I have a little cash stash that's just ready to just deploy for Palantir and some of my others, and get that nice super sale.
Yeah. Yeah. I'm looking forward to, these next couple of months. I guess I always do, like after each earnings, it's like every quarter is like Christmas, you just earnings season, and I'm just so looking forward to announcements between now and when they announce the full year. I mean, that full year, 10K is going to be really interesting read. They usually incorporate a lot of information, and then we'll get I'm hoping for updated guidance, but I don't know. I'm preparing myself for that 30% or greater until 10.
Yeah. And I think too, I mean, I really feel like this is tracking how the Tesla investment was, where it was 5 years of trading sideways
Yeah.
and buckling up and just like keep adding. Unless the thesis changed, keep adding.
Yeah.
but I think you got me excited enough that I do need to just go in, get me some Tesla shares, start slowly building that. Obviously, it's at $1 trillion company. I think it could be 4 or 5 or longer. And just, what that's another thing too, before we wrap up here, is know yourself, right? Know why you're investing, know what the goal of the money. For me, it is just to have the house paid off, and then that's my last debt, and I can financially be free and eventually choose when I want to just talk for stocks, and that's my income, right?
Yeah.
It doesn't have to be, I don't have to be a multimillionaire or anything. I just, for me, the financial freedom of doing what you love, when you want to do it, where you want to do it, that's retirement. I don't see myself not talking stocks or working. And it doesn't feel like work. So when you're doing something that you love and it doesn't feel like work like that, like it's great.
I agree. Yeah.
So let's do one last thing here. We're going to go through, I did this with Felix. I'm going to share my screen. This is my World Changers stock list. I'm still perfecting it because right now it's only qualitative. I want to add quantitative stuff. So we're going to go over and we're going to have you score it, and I'll share what scores I got on Palantir. So the first thing is top dog, first mover advantage, an important emerging industry. What would you score that as?
Oh,
5's
God.
the highest, 1's the lowest.
So for Palantir, is that what you said?
Yes. Yes.
Top dog, first mover advantage, important industry.
Yes.
It's got to be 5.
That's
yeah.
right. Okay, so this is Felix's. This is mine. So next one is: are they disrupting an industry or solving a new problem?
Yes, 5.
Does the customer have a large TAM?
Huge TAM and growing very quickly. 5. Yeah.
Is the problems they're solving global problems?
Yes, 5. Oh man, I wonder if I should say 4 because they're limited on.
That's a good point. That wasn't actually brought up before.
I think about that a lot because China is such a huge market and only growing.
I like that. I'm changing my. You convinced me to dock them one more. Are you going to go with 4? I'm going with 4.
Yeah.
That's true. That is, they are cutting out a lot of the world that is against the US. Are they challenging the status quo?
Oh, 5. Yeah, definitely.
Company has a sustainable and competitive advantage via superior technology, patents, or moat.
Yep, 5.
Yep. Does the stock have past appreciation for the last 3 years? I gave it a 3. Felix gave it a 2 because it really has only been 1 year that they've been public. So whatever you feel deem necessary there.
Yeah, I'd say 3. It's done over 100% in the last year. So
beat the market the first year. Is revenue growing over 25% annually for the last 3 years?
Oh yeah, 5.
Are gross margins over 50 and a path to 70? They're actually 80. So we'll call that a 5. Yep. Is the company a large cap, medium cap, or small cap? So this is where I ding companies because it's even easier if they meet all the other requirements and they're a small cap to get that 10 bagger. So I gave it a 2, and so did Felix, because it is a large cap. It's not a mega cap like NVIDIA, which I gave a 1, but I just think from the law of numbers, no stock's perfect. So I gave it a 2.
Yeah, I'd have to agree with that too.
Okay. Is the company profitable and do they have a clear path to profitability? I gave it a 4 because I know they're not profitable, but their cash flow is growing astronomically. And the only reason they're not profitable is because they're choosing to use SBC, stock-based compensation. But I guess technically, if I kind of probably should go to what Felix did there, just because if I'm following myself true to the question, they're not profitable. So he did 2.5. I think I'm going to give it 2.5.
I'd say 3. I'll round it up to 3. Okay. Yeah.
And then does the company have no debt? Yes, they have no debt. Yeah. 5. Does the company have a current value over 2? Yes. So they have a lot more cash on hand and value than what they're worth. Yep. Is the company generating free cash flow? That's where I gave it a 5. So that's where that question and the other one, you can't have your cake and eat it too. So I should have moved mine down earlier. Is the company spending continuously on R&D and building optionality? Most definitely.
Yep.
Does the company have operating margin over 35%? So they're actually negative
Yeah.
95%.
Yeah.
So I didn't realize that because I forgot this SBC factors in that.
And
So
even on a adjusted basis, their operating margin is 30%. So yeah, not even.
okay. So what are you gonna give it, a 1 or a 2?
Yeah, one. No, should be
Okay.
fine.
Yep. So good management, smart financial backing, and proven founder led. Yes.
Absolutely. Yeah, 5.
Our favorite things. Has the CEO been with the company more than 10 years? Yep.
Yep.
Does the leadership team's compensation align with shareholders? That's where we had to give it a 1. I don't know how you view that.
Oh, I don't know.
You can
Leadership team
too. Don't
compensation.
feel peer pressure.
I'd give it a 5. I like the stock-based compensation a lot. I think that aligns very well.
Okay. I think I gave it a 1 because of the fact that they're having to dilute it constantly. So it's impacting us. But you're right. Long term makes sense. Does the company have high risk and have high insider ownership? Yep. So
Yep.
5. Does CEO have high ownership? Yep.
Yep.
Does the CEO have a long-term vision or view of the company? So we both gave that a 5. What do you think?
Absolutely. The way
I don't
his
think we know his
individual.
full vision. I don't think it's at all divulged.
Yeah, he holds back.
Can the company add, and they also don't keep him on camera either, so that way make sure he doesn't divulge it. Can the company add new revenue streams and mutate into a completely different company?
Yeah, 5. Yeah, they've proven that with new products.
Yep. Does the company have reoccurring revenue model?
Yes.
Yep. Does the company have high net revenue retention? So I gave it a 4. Felix gave it a 5 because I don't know what the net retention rate is. I mean, obviously people are expanding a lot, but how much is that concentration? We don't know.
Yeah. I'm gonna have to go with you there with 4 because we don't have visibility into like each cohort and how they're performing. Yeah.
Yep. Does the company have high internal employee satisfaction or support of CEOs? So I said 4. Felix gave it a 3 because we did see the big ding. I mean, it went from 85% approval rate to 65% on Glassdoor. Company's still 4 stars on Glassdoor, but be interested to see your take on this one.
Yeah, I'd probably put it a 4 right there with Glassdoor, and especially because it's so new compared to those new employees. Maybe it'll change in the future after they reach steady state.
Yep. Does the company have a strong brand appeal and awareness? So this is one you can score in a lot of different ways. I gave it a 2 because if I ask a whole bunch of my friends like about Palantir, unless they follow stocks, they don't know what the hell I'm talking about.
Yeah. Yeah, I'd say a 2. I mean, even in the sectors that they're operating in, I've heard people say that management's intimidated by their product suite. So yeah, 2.
Is the company considered overvalued by analysts?
No, I mean the average rating, that'd be a 5.
And then is the company playing in future mega trend or current mega trends in society?
Oh, absolutely. 5.
Yep. And will this company keep your attention for the long term?
Oh, yes. 5.
Yes. All right. So let's see what you scored it. So max you can get is 150 and you gave it a 133. All right. And
Nice.
133 divided by 150. 88.6. That is the newest highest score on the chart. Mine was 87.3. And it's that kind of qualitative look at companies that I think can give you that conviction and things you can't put a price on sometimes is the quality of the company, the technology, and the leadership. Hence why we're invested in Palantir for the long haul. This is not buying advice, selling advice, recommendations, but we do believe in investing, which is long-term ownership of shares of a company. That's why we follow Palantir.
Absolutely. Yeah, those are great questions. I love that.
Yeah, I'm working through it. On the quantitative side, I actually have a whole bunch of different stuff. I started playing around with it with NVIDIA, with short interest and stock return markets for the last 3-5 years, gross margins, all that stuff. But it gets to a point where you can almost overanalyze companies.
Mm-hmm.
For me, I like the qualitative because that can normally you'll win out on most of those. Obviously, there's some losers, but Where can my listeners find you on YouTube and Twitter?
Yeah, so on Twitter, I'm fairly active. It's at Jacob Urey. Urey is spelled Yurri, and on YouTube, there's two different spellings. Just type in Jake Urey, spelled Urry, Jake Urey Palantir. I'll be one of those top top recommended if you put my name in there.
Awesome. Awesome. So I just really appreciate it, Jake. Please do give him a follow. Check out the YouTube videos. That definitely not only will help him out, but really you'll learn, and you'll learn how to do your own due diligence, find your own conviction, and remember, it's never too late to dominate your investments. Thanks again, Jake.
Thanks for having me, Dom.